Hey traders, welcome to this educational video where I will be showing you guys how to do a top-down analysis and how to basically profit and basically be consistent in the market by using top-down analysis from the monthly time frame all the way down to the 4-hour time frame. So for without further ado, let's have a look at Euro Japanese yen from a monthly perspective. So from a monthly perspective, when I say using a top-down analysis, you can do it with any sort of pair. You just need to know exactly what kind of market structure the market is in, market environment, the Fibonacci levels, and also trend lines, support and resistance as well. So these are all the strategies that actually tie into one strategy, complete strategy, that we will teach you guys in the mentorship program and also in the VIP program as well. So let's have a look at what we have. On the monthly time frame, Euro Japanese yen, we have this double top over here, this high over here. Then we have followed by a lower high, followed by a lower high. So what is the market trying to tell us? Basically, the market is starting to go down in steps, and what we can expect is the market is basically bearish from a monthly view. Now, if we take our trend line and we use our trend line to our advantage just by taking it from that high over there that we identified earlier and all the way down that we get some good touches around here. We have a good touch over here, we have a good touch of a resistance line over here, we have a good touch. So these are very important, that your trend lines should always touch at least 3 places in order for it to be a valid trend line. Now what I would also like to point out to you guys is that we have a counter trend line that is broken at the bottom over here, and this basically, what this means is that the market has basically started from being a nice bullish move to a bearish move, because we have a nice break of counter trend line on a monthly perspective. So now let's go down onto a 1 week perspective. But before we go down onto 1 week perspective, I would like to show you guys that right now we have a very strong structural level in the market, and what we need to see the market do is at least come and retest this area. Now what I mean by strong structural area in the market, if you have a look over here, we had a very nice support area over here, we had a very nice support and resistance area here, but broken to the downside. Now over here we have resistance, support again, support and resistance, a resistance again, plus we have a nice false breakout of that trend line over there. So these mean that the market has a strong level in the market. Now it's very easy to identify it using just a naked eye, but you could also use the Fibonacci by taking your Fibonacci from this high over here all the way down to this low over here, and you will find that the market has better lined up with the 382 of the Fibonacci, which is a strong level in the market. And now that we have basically broken this counter trend line, we expect the market to come and retrace to the 382, at least the 382 of the Fibonacci, which lines up perfectly with previous structure. So let's go down on the weekly time frame and check out what kind of price action we've got. So on the weekly time frame, it's pretty clear that the market has reached this area or strong area in the market, but we have not yet reached the very good level in the market yet. What we would like to see is we'd like to see the market have a bit more development in this area before we can take this trade to the downside. So we always need to be reactive and be patient, and instead of you being predictive, it's better to be reactive, waiting in the right place in the strong key levels in the market in order for you to take the trade to the downside. So on the daily time frame, let's have a look on the daily time frame what we have. Let's keep our charts nice and clean. Okay, so on the daily time frame, it's pretty clear that the market reached this area over here and started a push to the downside, but this was mostly expected. Why? Because we have basically a trend line running over here that we can expect the market has now started to respect this trend line, and what we want to see is further development of this pair. When I mean further development of this pair, this pair is not yet bearish. We have a bearish view on the monthly time frame, we have a bearish view on the weekly time frame, but the daily time frame does not align yet with the weekly and the monthly. So what we need to see basically is the market come up, we need to see the market reach this area, maybe create a double top, and then start the next push to the downside, because right now the market is still bullish. If you have a look, the market keeps making higher lows and higher highs. So we have a low here, higher low over here, we have a high over here, we have a higher high over here, higher low again, okay, higher high, higher low, higher high, higher low, higher high, higher low. So this means that the market environment and the market is not ready yet for a push to the downside. So what we need to see is further development of this pair. Further development of this pair, we would like to see the market reach this area first. Once the market will reach this area, then we will be looking for a possible short entry on this pair. Now it's very important to say, and very important for you guys to understand, that we need to be reactive and not predictive. Now if the market will reach this area of importance, or the strong key level in the market, then we'll be looking for a possible short entry, because if we have the market reach this area, we would have created a higher high over here plus a higher low. What we want to see then is the market to break this counter trend line over here. We would like to see the market break this counter trend line, and then all the different time frames will align better with what we have said earlier. So on the monthly we have bearish look, on the weekly we have a bearish look, on the daily not yet. So what we have to do is we have to wait patiently, be reactive and not predictive. So we just need to wait, look at the market structure. When the market structure and environment shows us that it's ready for a push to the downside, what do I mean? Means by basically if the market starts to create lower highs and lower lows on the daily time frame, this means that the market has started to become bearish, because right now we still are a nice bullish, we still have a nice bullish momentum. So we don't want to enter this trade now. We would rather wait for the market to reach this area over here. Once the market reaches this area, then we'll be looking for a push to the downside. So I hope this educational video helped you guys a lot from doing a monthly and weekly and a daily perspective top-down analysis. And basically you can use this kind of analysis for any pair to profit off the market and also to be consistent in the market. Now what you guys need to know is it's very, very important that you invest in your Forex education. If you invest in your Forex education, you will learn much more about the market, and it's much easier for you to profit and also to gain experience trading the Forex market. I hope you guys enjoyed this video. Don't forget to leave me a like and a comment. Make sure that if you have any problems or any questions, leave it in the link below. Thank you for your time, and I will see you guys in the next video.